The stock market just keeps hitting brand new record highs after highs. And my phone has been blowing up with notifications that every stock that I own is hitting a fresh new 52-week high. And I guess that's a good problem to be having, except that means that finding stocks that are on discounts becomes that much harder. And this is already a very saturated market. And I can't believe it's actually been over 2 months since I did my very last stock market portfolio update. And that's something that I used to do twice a week, but is now becoming more and more rare. So if you guys want to see more of these updates where I go over all the shares of positions in my portfolio, let me know in the comments, and make sure you guys hit that like button as well as that subscribe button for the YouTube algorithm. That's actually the best way that you can help a small-time YouTuber like me out. And I actually just recently had my internet knocked out these past 3 days, and boy, was that super rough. I don't know how all of you guys who used to live without the internet way back in the day, I don't know how you guys did it. I nearly went crazy after just 3 days. It snowed like an inch here in the south, and that was enough to shut down Xfinity internet. But thankfully today I got it fixed, and today we will be going over my portfolio. And it looks like there was this huge announcement when I was gone, and that was Robinhood announcing their new fractional shares program. Now you can buy stocks with as little as $1. Wow, I suppose that's a cool feature. But really, off the top of my head, I can't really think of more stocks than just two that are that expensive that I would need fractional shares for. And that, of course, is for Google, which is trading at around $1,300, and Amazon, which is trading around $1,750. Most other popular stocks, I would just buy those outright. This kind of reminds me of the old wives' tale of how maybe when you were under 21 and you wanted someone older to buy you alcohol, and they said, "Are you really mature enough to be drinking if you need to ask somebody else to smuggle you beer? Or are you ready to be investing in the stock market if you can't even commit to buying the whole share of a company?" Maybe Google, Amazon, I can understand, but for most of us, buying a share of a company like Apple at $275, that might take a little bit of saving up, but it's not, the end of the world to save up for that particular share. And then you get to enjoy the full perk of being a shareholder of Apple rather than just a fractional one. And chances are that nobody is getting rich buying just a fraction of a stock for $1. Yeah, people are acting like this is the greatest thing since sliced bread, and now, all their investing dreams are going to come true, and this is what had been inhibiting them from being successful in the stock market, was not being able to buy fractional shares. And people are acting like this is what will help Robinhood get back in the game, in which they have been losing to other brokers since they all went commission-free. No, while this is a cool feature and is a good step in the right direction, this isn't what's going to be bringing Robinhood back up there. Something like the new cash management system that they have, and they've finally actually been accepting people. That's how you see there it's up 2,300 spots. Normally, it would only allow you to be up 1,000 before, so they've finally been accepting people. Having retirement accounts on Robinhood, actually updating their stats and research tools. That's what's actually going to propel them back up there with Charles Schwab and E-Trade, not these fractional shares. But I don't know. I mean, this is something that a lot of people have been asking for. So, it's a step in the right direction, definitely. But I don't think this is that revolutionary. And I think people are definitely overhyping it. But let's get into the actual portfolio. And I try to be as transparent as I can be with you guys on all my gains and losses. Some of us here on YouTube may try to hide it, but I don't really have anyone else's expectations to beat other than my own. So I had been beating the market much of the late spring and summer, but now I've been back to trailing the market ever so slightly with this most recent upswing. And if you look back at my old videos, this is actually what I predicted would happen exactly. Before, when the market was a bit more volatile, my portfolio is actually built to be a bit more defensive. So it's not going to be hit as hard when times are a bit more rough. But when times are really good and there's a lot of optimism in the air, my portfolio, it'll lag behind the market a little bit because it's not as heavy on growth stocks. So as you guys can see here in the last 3 months, I'm up $1,100, up almost 7%, which is pretty crazy. It's slightly more than how the market has been doing. Also have a slightly higher dividend yield, and of course we're not paying that dreaded expense ratio at all. But again, as time continues to go on here, that might sway in a different manner there. Okay, so first stock in my portfolio is one of the world's largest companies, and that is Apple. I own 6 shares for an average cost of $189 and have a total return of over 45% on this particular stock. This is definitely one of those that you just kind of buy and you just set it and you just let the returns keep coming in here. So you can see in the last year it's up 61%. Last 5 years up 141%. I definitely think this stock will continue to do well in the 2000s, 20s, decades. Remember, there's a huge cult-like following after Apple. I was talking to one of my coworkers, and she was telling me how she was going to be buying $250 AirPods for her son this Christmas, and I was just in complete shock because I can get headphones for a fraction of that price, guys. We were just talking about fractional shares. You can get a fraction of working headphones for cheaper than what Apple sells them. But hey, you guys know people will buy anything these days. Just slap an Apple logo on it and people will buy it no matter how much it costs. At the end of the day, though, I do think that Apple does create very high quality products, and that's why people come back time and time to continue buying it. Then we have McDonald's stock. This is a stock I recently bought at a little bit of a dip. As you guys can see, I think I got one at 188 on November the 4th. And, they've recently been on the news a little bit because their old CEO had to step down because he was having a consensual relationship with one of his coworkers. And, of course, that's not illegal for two of age people to be having a relationship, but that goes against the company policy, and he had to step down. Now, they already have the new CEO in, and I really think that's a black swan event. That's not really a reason to be selling off of McDonald's. I know people aren't going to McDonald's based on who the CEO is, right? They're going there because they can expect this quality of a product. Of course, McDonald's isn't always the highest of quality, but at the same time, they don't have to pay that much money for its products as well. It's food products, and they know that they can get that food relatively quick. I was going on a recent road trip the other week for Thanksgiving, and I stopped at McDonald's because I knew what to expect there, right? And how much I'd be paying there versus other restaurants. I didn't know, how the service would be. I didn't know how much I'd be paying. McDonald's, those golden arches, I know exactly what to expect with them. Okay, then we have Applied Materials here. This is not so common stock that a lot of other people own, but I really enjoy this stock because they are basically making the raw materials for a lot of these semiconductor companies to be making its products here. As you can see, I'm up a little bit on this position, 14%. It pays a very small dividend and is going to be a big one here in the upcoming 2020s decade. So as you guys can see, it engages in the material engineering of new chips and advanced displays in semiconductors. And really, as I think about how much technology is going to change in the next 10 years, it's already changed so much since 2009, and I definitely think that artificial intelligence is the way to go, and a company like Applied Materials is definitely going to be leading that charge. So similar concept here with Intel. I own 5 shares. I've done decent on this position here, $18 in total return, a little under 7%. And, there's been definitely some buying opportunities here with Intel. Does seem to be swaying back and forth a lot. Pretty large company at almost $250 billion market cap. Next one I own is General Mills. So this is a bit more of a boring stock, nothing too flashy with selling breakfast cereals and other food products. But again, this is another stock that pays around about almost a 4% dividend. I think the one on here in Robinhood is a little outdated. So again, this is another stable defensive stock. I know even in times of recession, people are going to be eating food. I would hope they are. And General Mills will be providing that. This is another one to get excited about. Nvidia here. I've only owned this for under a month, and I've already made almost $20 on it, a little under 10% return. I'm definitely going to be adding to this position. I want to get at least $1,000 in total equity in it, probably by spring of 2020, because Nvidia is really one of the leaders in artificial intelligence. I love watching their presentations. If you type in like Nvidia into YouTube, you can kind of see they'll have their CEO, Jensen, speaking, and he really goes over some of the cool products that Nvidia has up its pipeline for the future. And I really think it's going to be an integral part of the economy going forward. Then we have Boeing, which is always a roller coaster of a stock as well. So latest I've heard of is that their 737 MAX engines are going to be out. Now it's being pushed back to at least April of 2020 is what I seem to have read on the news. That's always seems to be changing, but Boeing just been holding on to it here. Again, this stock really just goes up and down a lot, really is very sensitive to any sort of news on it. You know, I'm kind of glad that the 737 is being pushed back into April. You really want to make sure that whatever was causing these planes to go down, that they really resolved that issue and that it doesn't happen again. Of course, flying is considerably safer than flying, or not flying a car, but driving a car. We're not there just yet, but maybe Elon Musk will make that happen. So really hope that they fix those issues. And in the meantime, I'll be collecting dividends from Boeing. Then we have Visa here at $185 a share. This is just a stock that's like a rocket ship, just keeps going up and up. If you think about how much of the world still uses cash somehow, I know I talked about how annoying it is to be waiting at the store and having someone count their change in front of you. But Visa and MasterCard hopefully will allow that to be less of an issue. Then we have the world's largest company here at $1.15 trillion market cap, Microsoft. And there's, even though Microsoft is so big, there's really no signs of it slowing down anytime in the future. I think I read that Amazon was actually suing the government because they actually gave one of its large contracts to Microsoft instead of Amazon. So Microsoft definitely conglomerate of different technologies that they provide. Pepsi, like I was saying with General Mills, another company that's going to be around for a really long time here with their plethora of different products under different brands. I've had decent returns on this stock as well, up almost 24%, and you get a decent dividend yield with Pepsi as it slowly becomes a dividend king of 50 straight years of increased dividends. You have UNH here, another stock that's super volatile, but every day that passes by, we're getting one day closer to the 2020 election, which means a lot of red flags with this stock are finally going to be answered, at least for the next 4 years, right? So this is always going to be a stock that may be experiencing a lot of volatility just based on whatever's happening in Washington, D.C. Also, anybody else watch all the Democratic debates and feel like every time I watch the news, there's a new person either entering the contest or dropping out of the contest. And I usually have no idea who these people are, even though, I try my best to stay up to date on the news. And I'm always like, who are these people? Then we have now this is a stock that many of us here on the YouTube community pronounce in different names. I like to say reality income, even though it's clearly realty income. And there's a reason why I made this portfolio update live, and that is because I wanted to buy more of the monthly dividend company. So it's trading at a little bit of discount right now. Well, actually not really of a discount, but a little bit of a dip is more of what I meant to say. And that's because REITs have been hit a little bit this past week, since people are taking money out of higher dividend stocks and putting them more into the growth stocks. So I see a buying opportunity here. I like to always do somewhat of a contrarian play than what the rest of the market is doing. And this is a company that owns Walgreens, 7-Elevens, FedEx, Dollar Generals. Of course, it doesn't own those actual businesses, but it owns the real estate that those businesses then rent out. And I don't really see 7-Eleven or Walgreens necessarily going out of business, or movie theaters like AMC, Regal Cinemas, Dollar Tree, Lifetime Fitness. Let me know the next time that you order a workout on Amazon, or if that's even possible. So I'm going to probably just double my position here by 2 shares. Let's do a limit buy of 72.48. And we'll do it for the next 3 minutes because the stock market is about to close. So let's just buy 2 shares. This is going to double my monthly dividend income from this company here, and hopefully the trade will go through. Then we have AbbVie at 87.87. This is really the story of a stock coming back to life here. I was down huge on this position, definitely well into the negative hundreds, and now I'm almost back to breaking even, which I never would have seen coming earlier in the year. So that's why it's great to sometimes just hold on to stocks, because you could have bought AbbVie around the $67 mark and gotten a ridiculous 7% yield if you were brave enough to buy it back then. As you can see here, at one point trading for $62, absolutely insane. So definitely could have gotten a high dividend yield there. I also wanted to buy a few shares of Store Capital, so similar concept to O. Once again, you can keep locking in dividends with these stocks. So 37.31 is what it's trading at right now. This is a stock that Warren Buffett also owns, and I want to own this in my portfolio as well. So we'll put it in at 37.31. Continue by 2 shares, and hopefully it will go through. All right, so now I own 2 more shares of Store. Like I said, Warren Buffett owns the stock. That's almost enough reason to buy the stock yourself, but of course you should always be doing your own research and due diligence. And I would hope nobody's copying me. I'm definitely not a licensed financial advisor or anything like that. This is only for educational purposes. I have Johnson & Johnson here at $141. Nice to see the stock rebounding again. Of course, it's always in the news. It seems like everybody just wants to file a lawsuit against Johnson & Johnson. Trading at 141 here, so I'm up a little bit on this position. Of course, as long as they keep paying me those dividends, that's what I really care about here. 95 cents a share. They should have a dividend increase coming here soon for that dividend king. Then we have Pfizer, another stock that's seen better days, up a little bit in the last 3 months, but in the past year, it's been down almost 14%. So I own 9 shares at average cost of $38. Probably will be adding more into that position next year. Then we talked about Visa. We can't forget to talk about MasterCard as well. Almost reaching that $300 mark. So this is, again, such a great growth company here. Returns great value to its shareholders. I think I read that it actually just recently increased their dividend as well, unless I'm maybe confusing that with Visa. But it's great to get the best of both worlds there. You get both the capital appreciation and the increases in dividends. And again, this is a stock that I think is going to have incredible growth as more of the world just continues to start using less cash and more chip and cards. JP Morgan Chase. So I don't even know. Now, as you guys can see, it's now moved into after hours. But JP Morgan Chase, this is really just taken off here in the last year. It's up 34%. These banks, while they may have some shady business practices, most of what I would say that they do is somehow legal. And, you want to take advantage of companies that get to operate the way that these big banks do. So only own 3 shares. Every time I'm like, when will this stock finally have a pullback? It never seems to have one. So I don't know, maybe I'll eventually have to just buy in when it's at an expensive price. But again, it has been raising its dividend very generously. As you guys can tell here, it's went from around 80 cents a share to now it's 90 cents a share. So it's a pretty big increase just year over year. Then we have Bank of America at $34.44. Basically everything that I said with JP Morgan applies with Bank of America. Almost 25% return. I haven't held this stock for that long even. First time buying it was at the end of August. So already experiencing great returns here with these stocks. Now this is a sector that's actually been hit really hard this year, and that is the oil industry. And it's down almost 9% this past year. There's always little bits of news here that we won't need oil anymore once we have all these solar powered everything and batteries, and people think that we only use oil for cars when we actually use it for more than just automation. I mean, think about how much plastic there is in this world. A lot of that comes from oil. So I definitely think that there's a reason why they call it the black gold, and I don't see people stopping their usage of oil in the future. Maybe they will reduce it, but definitely not stop. So same concept again with Royal Dutch Shell, another oil company that's headquartered in Europe. So again, these prices are always very subjective to whatever oil is trading at here. While you might think that I have not received any sort of return, the way that they compensate their shareholders really is through their dividends. So I have been getting the dividends, and what's great about a lot of these oil companies is that they usually give out huge dividend payments. Actually trades closer to around a 7% dividend yield, which is absolutely insane for such a large company, blue chip company like Shell. Then we have Starbucks. Recently, they just made a video about them and how I think they're just going to continue to do well, just because, one, people are so addicted to coffee, but two, people in China, which is where Starbucks is focusing a lot of its expansion in, slowly switching from tea, which is what they have been drinking for thousands of years, into slowly starting to drink coffee more, which is what Starbucks is providing there for them. So definitely see a lot more growth in this company in the future. Pretty nice returns here, 16%, own 7 shares of them. Next stock here is 3M at $168.79. Hope you guys are still with me. I know I've been going over a lot of stocks and a lot of information here pretty quickly here, but saw Gen X just made a video about 3M. Not surprised that such a great blue chip company is in his portfolio. This is, even though I'm down huge on this position, I'm definitely very bullish about this in the future. I think as soon as these trade war talks are over with China, that this stock will rebound a lot. It does almost a third of its sales in China. And again, 3M has that history behind it that I know with its over 55,000 different products and 100,000 plus patents, that 3M is definitely a company that we will still be using in the future. And once these trade war talks are finally resolved, I expect 3M to bounce back. Then we have one of my more riskier stocks here. NRZ trades at a ridiculous 13-14% dividend yield. And as you guys can see, I have been getting paid those dividends. I get $6 every quarter from them. But again, since it's a mortgage-based REIT, this is a bit more of a riskier play. And as we head closer and closer toward a recession, probably in the future, who knows how long that's here to stay. Then we have one of the more expensive stocks in terms of just share price in my portfolio. Equinix here at only 2 shares, but it makes up almost 6.5% of my portfolio. I have decent returns on this one, a little under 10%. And for those of you who don't know, even though I always try to brag about this stock, they do a lot of the behind the scenes infrastructure of data centers, storage, and that's really a lot of the infrastructure for a lot of servers, and a lot of computers wouldn't be able to run without Equinix having kind of that foundation already built for them. So if you guys are interested, make sure you definitely check out this company. It does a lot of its business overseas as well. So you can see it's definitely a global company. And it's just had monstrous growth here in the last 5 years, up 148%. I think they've said that since the 21st century has started, Equinix is one of the best performing stocks since then. Then we have Procter & Gamble, another boring company, but hey, sometimes boring is better. It's up 32% in the last year. I think this might actually be my best total return stock at 60%. Every time I try to justify buying more, it just seems so overvalued, but then it just continues to go up and up. Then we have Southern here at $60.76, doing very well for a utilities company. Legal monopolies are always the best, right? FedEx, probably one of my probably worst performing stock in the portfolio at almost negative 30%. Hopefully they recover, but in the meantime, I'm just going to keep collecting dividend payments from them. We have my two railroad stocks here in CSX and United Pacific. So United Pacific, I'm up on $68. Again, I always think that we will be using, in one way or another, we will be using railroads to transport goods. And, one thing I wish that we would do more here in the U.S. is have high-speed rail. I think that would be great. I know that's slowly coming along. CSX, similar concept, down a little bit on this position, but once you factor in the small dividend payments, actually am in the green on them. Then we have Verizon. You guys all know what Verizon does, provides phone services. And this is just another stock that I hold in there. They might be, they are coming out with 5G, but really the reason why I hold on to them is for their stable dividend. And this company brings in a lot of revenue and money each year, billions of dollars in net income, and they pass it on to me in the form of a dividend. Medical Properties Trust, another great read here. They own the real estate that a lot of medical facilities operate on. So obviously, as we continue to have aging populations and people continuing to live more, healthcare is always going to be around. We have Waste Management. It seems like ever since I bought this stock, it has stopped going up. So around here is probably when I first started buying into it. And of course, that's when it stopped going up. But Waste Management, probably recession-proof. People are always going to be throwing out garbage. And I expect it to continue growing its dividend in the future as well. We have Chubb Insurance, which I have been looking at adding more into as I want to get more exposure into insurance companies. So a little bit of growth there. I will probably be doing more research before buying into them, though. Then we have AT&T. Had to make sure I didn't say T-Mobile because that's the cell phone service I use. But AT&T, similar concept to Verizon. Right now I'm actually up on this position. I've usually been down on it, not including dividends. There's a lot of history behind this particular company, particularly not always the greatest of history behind them, but I do think they will be able to continue paying those dividends well into the future. Is Disney, which is trading at a $146.38 value here. I'm up a little bit on this position, but Disney is such a large company. I couldn't even list out every different industry that they're in, all the different products and copyrights that they own. Disney Plus is already becoming super popular. It's like people have already forgotten all about Netflix and Hulu, and they're slowly switching to Disney Plus. So I hope to just continue to be able to profit off them and their future growth. And then the last stock we'll talk about is SPHD, the Power Shares, S&P 500, high dividend, low volatility stock. So if you guys aren't familiar with this stock, it does trade at a pretty high expense ratio, unfortunately, but basically it's just a big basket of high dividend yielding companies that typically have very little volatility to them. So basically, ever since I've owned this company, I've just continued to get dividend after dividend from them. And, it's usually a good sign when you start to see this little scrolly bar here of all the different dividends you've gotten from them. Probably won't add into this position just because I like owning individual shares of companies. Trades at a high expense ratio, but you won't experience much volatility with it if that's what you're interested in. So that's going to do it for the portfolio, guys. That was me going live with you guys into after hours. Let me know what stocks you guys own. Let me know what you guys think of the new fractional shares. If you think that it's a little overhyped like me, or if you disagree with me on anything that I've said, I love to, duke it out in the comments. And of course, guys, be sure to hit that subscribe button for more content. And if you guys ever have any questions, feel free to reach out to me on Instagram in the DMs. I do respond there.